evening, all. Ira Epstein, and here we are with your financial market wrap up. And this is for the evening of Tuesday, the 6th of January, 2027. We're right now about, 6:20 p.m. Central Time. We are working hard to get me back on the set where I'll be standing in front of the charts talking to you as I did before we made our move, which wasn't that far ago. We're just over in our house 1 month here. So we've gotten just about all the boxes where we can live in the house now as normal people. That's a rough thing after a 30-year in one home and you move. It's very strange. But we're now studying what we can do and how to make this work for me. And my goal is to try to get this working now this month. My goal is to go back to doing special reports very shortly. And my goal is to bring up webinars, which I didn't do many of last year. But now that I'm sitting here, basically, which I love, in the woods and the dunes off the lake, it'll be a lot more fun for me and things to do like that. So I'm really looking forward to it. Now, where are we in the markets? Well, tomorrow, you're going to get the Mortgage Bankers Association number. That comes out at 6 a.m. ADP, the private sector jobs data, will come out at 7:15. The JOLTS number, job openings and labor turnover, will come out for November at 9. Factory orders for October come out tomorrow at 9. The ISM data will come out at 9 o'clock for their December service sector index. And I think it's Challenger Gray tomorrow. I think that they're the same day as ADP. So we'll see what the corporate layoffs look. Remember, we have the U.S. jobs report coming up, and that's going to be a monster report that everybody focuses on. We saw today that Fed Governor Moran came out and said he expects over a full percentage point of cuts next year. I don't know. Before cuts, the market's having trouble with 1 or 2. So we'll see. But he is a major, major dove, and we'll see where that carries the markets. Now, before we get any further, I want to remind you that we are 40% sale on all my research and my courses is on. It ends on January 9th. So you have just 2 trading sessions to watch this. You get the courses if you want. You get 1-year services if you want, 3-month services. It's all there for you to give it a try. And I think it's an exciting time. We're getting vertical price moves. You've got to be careful with those. IraEpstein.com. You can also come up here. There'll be, if you move your cursor that I'm doing up there, you'll get an icon, or you can click over here if you're watching us on YouTube. So let's go to the chart action and see what we have. On the weekly chart of the S&P 500, the old high had been 69.94, and the high, these are closes only, remember that. So 69.79 was the trade. That was the high close. And now we're at 69.89 in open trade this evening. We'll see if the market can stay there. You can see where you're at. You're up into this whole resistance area now. And this is what you got to keep your eyes on. Can you get through this whole resistance area? When we take a look at where you're at in terms of the swing line, you have a lower low and a higher high pattern. So the market's got and has had something of a vertical run. It got as low as you can see here at 68, 66.50. Look up here when I do that, and you'll see what I'm saying. And it has really run pretty hard. It's about 130 points to the upside. For some people, that's a whole year's gain already. The market has pivoted around the 18-day average of closes with resistance, in my opinion, if it can continue the rally, to be the upper Bollinger Band at the 70.35 level. This is the band, and here's the values, the 70.35. In terms of momentum, you are overbought as can be, not even close to embedding. So I think we're in a window time frame where the professional type trader is going to look at this market and maybe say, maybe I got to take some money off the table. When we look at the E-mini NASDAQ, the market is now recovered, and you can take your arrows, which I'm going to do with you here. You've got one pointing there, but if you look at this arrow, you had a low here of 25.426, and here's 25.406. So you actually have the market with one arrow pointing down, one up. I'll just remove this one, get it tomorrow for you. When we look at the Dow Jones, you're overbought. You're at the upper Bollinger Band. This market, when it gets up to these bands, often says to you, take some money off the table. I know you don't want to do that because in many people's eyes, the market is like Jack and the Beanstalk. It's just going to keep going forever. Remember, you don't make money till you take something off the table. That's not to say that you don't have investments, but if you're trading, you've got to take something off the table to get your profit. It's that simple. If you're looking at the Russell, the market has finally cleared this resistance, but I think a bigger challenge is going to be the upper band. So in all the stock indices, I am not a bear. I want to be clear, but I am a seasoned professional. And there's a point where you take some money off the table as these markets accelerate like that. In the DAX, we did what I thought. We rallied yesterday, gave back a little today. But the difference here, and there is a huge difference, is you have an embedded reading. So this market on breaks, I think, gets bought and goes even further. When we take a look at the 10-year note, notice that you're back into a trend that is down. You have lower highs, lower lows. You're under the 18-day average. The resistance is that number. And if you clear 112, 16 and a half, this high that you can see right up here when I do this. If you clear that, you negate the downtrend. You could even start a small uptrend that could carry you back here. Be on the alert for this because it is jobs week, and that's going to be very important. The 2-year note is doing its darn best to hold together at the 100-day and the 18-day average of closes. In the dollar index, you have been fighting a battle at the 18-day average of closes in red. The resistance has been the 50-day, and the 100 has been the support. The trend is up, the bias is up, momentum is pointing here, but your resistance is that band. Can you clear it and do anything if you do so? And on the other side, you've been in a downtrend in the euro, and this is the short cover area. Again, when you did it the first time that you got here, it was the 100 and the Bollinger Band. Well, you're right back to that. So this is the area that I think the pros are trying to defend the market. In the Japanese yen, if it weren't for the oversold condition, I'd be saying that if you can get under 64.15 and a half, the market's a short sale. It got under it tonight. This arrow moves here, but I teach you don't go short into oversold markets. So it's not a recommendation I've made to my subscribers. In Bitcoin, market's fighting its battle at the upper Bollinger Band. Third time might be the charm. We're there right now, but you're overbought. I told you I think that we made a bottom in this whole area here from these lows and right there. So the 84,000 level is the area that I think the market has now decided to make a stand against. Even with the rally yesterday and this morning, I was telling people, do not fall into this sucker trap. The fundamentals are locked and loaded bearish right now. And you can see tonight you're down 100 points here, down 107 in the WTI. People were playing the emotion of Venezuela, not the reality of it. And the reality is, as I explained it the past 48 hours, I'm not going to do it again. And I just think that this is a marketplace that you have to understand that Venezuelan oil, as important as it will be in over time, especially if the country becomes more moderate in its stance, that's going to be important to America. It's going to be important to the Venezuelans, maybe them first or second, okay? It's important to Cuba, who's not going to get it. And that country can teeter, and that's what President Trump is saying. So watch how this all plays out. But you have an oversupply of oil in the marketplace right now. Heating oil, the warm weather is impacting the demand for heating oil and natural gas. Keep your eye on it. Today I'm on the lake. Yeah, I'm on Lake Michigan where I live. I don't live in the lake, but I live literally right there. And to make a long story short, 49 degrees. I mean, I'm used to the winter times, you're under 30. And here it's gorgeous. We're going to be in the 50s tomorrow. It won't last. You know how that is. But that takes away the draw for the heating oil and the gas. And these are things that you always pay attention to. So again, I want to remind everybody, please pay attention to what's going on. markets don't grow to the sky. They eventually find support areas, as you're doing here in the nat gas. And as I'm bearish as I'm talking, this is the spot that if you were sitting next to me, I'd be jabbing you in the ribs, take some money off the table if you were short. With that, I hope to see you all tomorrow. You have yourself a great evening. Thanks for watching this. I appreciate that, and take advantage of the sale that we have. Take care now.